Okay, okay, you're going to the studios. Okay.
Yeah.
All right, we are live. My name is Vaibhavv Ali, and welcome once again to Aura8. 2 weeks ago, we had with us the godfather of crypto. In fact, the OG godfather of crypto with us, the man who helped launch the foundation layer of the industry, Ethereum, Tether, and more. The founder of BitAngels and Transform Ventures, author of the Bitcoin Supercycle, and the man who gave us the 4 seasons of Bitcoin. Please, let's welcome back Michael Terpin. Michael, 2 weeks, a lot of things have happened, and especially last week, I think, or rather this week, we have had a lot of conversations on capex in the Web2 space. Do you see that also kind of snowballing into Web3?
Yeah, the last 2 weeks have been pretty much what I predicted. I basically said that there was a chance that 57K was the bottom, and I've been saying that was kind of about the highest I expected the bottom to be, going all the way back to on stage at Consensus Hong Kong. And when I was basically telling everybody who thought the bottom was already in at 62, that no, 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 we hadn't even hit the 500, the 200-week moving average. And we've now hit it a couple of times. And there's probably, like I said, 30-40% chance that that was it. I mean, it did have some of the hallmarks of a bottom, a lot of selling, did not bounce back. All the other ones were V-shaped recoveries really quickly. Like February was up 10% the next day after the bottom. This one just kind of laid there, and people like, well, oh my God, poor MicroStrategy, they're going out of business. STRC can't pay anything. They've only got like 20 years of Bitcoin left. They're going to have to sell them all. It's just like, yeah, that's a presuming that the price of Bitcoin never, ever goes above 75,000 again, which of course it will. And, and then Saylor, who got, punished severely by the market for selling 32 Bitcoin, said he's going to sell $1.25 billion worth as needed, and the market liked it. So go figure. And people forgot that he actually sold some Bitcoin in 2022, and he said, oh, it's tax harvesting, and they were fine with it. It's just like, the market is fickle. The market is driven by fear and greed, as I've long said. That's what the 4 seasons are all about. Because between the halvings, it's about math. As long as the amount of new money coming into the ecosystem exceeds the inflation, the price has to go up. But and it has $12 first halving, 670 second halving, 8,700 third halving, 64,000. This most recent halving, it'll be higher than that the next halving, probably by about double or a little bit more. And but all the wild volatility, which has been diminishing returns each cycle, has been fear and greed. Up 100x, down 85%. Up 30x, down 83%. Up should have been 10x, but was 8x, down 75%. This time we should have been up with good macro, or reasonably, sort of like neutral macro, up 3x. We didn't. We ended up having the peak at October 4th, and then the 10-10, highly manipulated, highly suspect, series of things that happened there with, both TradFi and crypto, kind of interesting things like the Binance deleveraging, and, et cetera. I've talked about this before. So many people, it's not my original observations there. It's been widely observed that there was some funny things going on. And, it was also the first cycle that, major whales that have been hodling for 15 years had a chance to OTC through traditional rails at a large amount. And many of them did. And it didn't mean they gave up on Bitcoin. It meant, oh, I guess I could sell like, a couple $100 million at like 120. And I know it's going to be back down to 60. I'll buy the same amount back and have all the remaining money to keep. And that's what whales do, and they get the liquidity because retail buys at the top and panic sells at the bottom, and here we had it again. But no, I'd say the last 2 weeks, what happened is you had what I predicted. I think I said on the show, even I've said it elsewhere, that history, shows that the last two cycles, Mark Twain is alleged to have said, history doesn't repeat, doesn't always repeat, but it rhymes. It tends to rhyme. And the last two midterm year bear markets, you had dumps in February and in June. You had then sort of a rebound in July, and then you had it give back all the gains in August, and then you had a fourth quarter bottom. And that was like the last two, midterm years. And so it seems to be happening again. I mean, I said when, there were a number of people, even from pretty well-known people, that when it went up to like 67, they're like, I'm all in, it's a bull market, it's a bull market, it's a bull market. I was like, not so fast. You haven't even gotten past 75K, which was sort of like a very important, kind of cushion when, things were dropping. And it's going to be a very important point of resistance to get us back to a bull market. And again, 60-70% chance we're going to go lower than 57K before we go, into a sustainable bull market, which I see as being Q4.
And you stick on to what you said earlier, that October is when we would see that.
October's the most likely. Again, about 30-40% chance that this last one was it. That would take really good macro and no crypto shocks. We really haven't had any crypto shocks this time. It's all been, kind of systemic macro shocks, right? And we had one today, right? I mean, we were climbing up into the 66, pushing 67 range, and then you ended up having, new activity in Iran, and that ended up like helping oil go over to $100 now, and so that then it's this kind of domino effect, right? So you ended up having the Iran activity, then that domino fell, and then that led to oil going up, and then when that domino fell, it now means that we're talking about rate hikes now instead of rate cuts. For the next Fed, and then when that domino falls, that's going to be another negative macro sign that could alone bring Bitcoin down under 57K. And we haven't had any crypto shocks yet, which has kind of surprised me, right? We haven't had any DATs go bankrupt and have to have the FTX type crowd go in and figure out what to do with all the Bitcoin, right? Most of them have quietly just sort of sold to someone else, or liquidated the Bitcoin quietly on their own without a bankruptcy, because none of them are fraudulent. They just simply did the most stupid thing you can do if you're dealing in an asset class that has had cycles. I mean, how idiotic. All of these companies, last July, basically there was a frenzy to get out. Every week somebody was raising, 500, 600, 700, $800 million to buy Bitcoin. What they do? They bought it immediately at the top of the market. And that was greed, right? That was greed coming in, and they're like, buy, 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 don't keep it in cash, it's going higher and higher. And it would have been fine to buy it as long as they sold it when it was at 90% fear and greed, and they didn't. They wrote it all the way down. And then all of a sudden their, multiples, which had never historically, even at MicroStrategy and the original GBTC, ever gotten as high as 2x. All of a sudden there's guys going at 7x, for just buying Bitcoin and holding it. That was unsustainable. People bought in, and then that unwound. And so I had said a year ago that I thought the macro shock that would be the weakest point in what could collapse there's always a bear market in the midterms because of the charts and the leverage and this and that. But what would make it worse would be irresponsible behavior by the DATs, and they kind of fell right in line. But so far, none of them have done it in a criminal way. They haven't done it in an overly leveraged way that required bankruptcy courts to come in, which is a pleasant surprise. I think it says that they're behaving as public companies more responsibly than, say, these big VC-backed lenders were doing. I mean, BlockFi just went poof. FTX went poof. And, those were not U.S. public companies, right? Coinbase got punished, but they had no fraud. They had no, they just simply got, oh, you're crypto, you're going to zero. And that happens at the bottom of bear markets. And I'd say that, we still have one more leg to go down is the most likely. And, today and yesterday, we had the shock of Google for the first time since they went public in 2004, having negative cash flow. I mean, they started out very profitably. They've always been very profitable. And even though they're, on paper, earnings are going up, the revenues are going up, they're, overly aggressive move into trying to compete with Anthropic and OpenAI when they already own the search business, cost them $6 billion in cash flow to the negative. After all those profits, they spent that and $6 billion more. And they've committed, I think it's 45 billion overall thus far to the spend. And it's a race that I don't think they can win. I mean, Gemini is not the best product out there by any means. I mean, Anthropic pretty much is right now for most things, and they're a pure play.
Michael, here
It's got data
I would
centers,
like
and
to,
Grok's going to be very competitive in the consumer space, even though they're kind of late to the game. And OpenAI obviously has the most users right now. They're a pure play.
but I think here I would like to slightly differ from you that it doesn't matter how Gemini is, but the reach that they are going to, right? Every uh, local cricket tournament or any major stuff in India, where like is the most populous country in the world right now, they are there. Every ad is a Gemini ad there. They have overtaken the TV shows, and TV is kind of dead in India. Only people maybe now 50 and above watch daily soaps on TV channels. You switch on a TV channel and then you have Gemini. I think they are wanting to widen their reach, because I think over after a certain point of time, it doesn't matter if your LLM is 80% better or 98% better. That difference is very limited. But let's talk about
I would disagree.
Ethereum. Uh,
I would disagree with that. I would disagree with that.
okay.
Because the best product people find out. Otherwise, Google would have never beaten the big market leader
Yahoo.
that was like putting ads all over the place. No, it was they're out of business now. I'm trying to remember who it was. It was like that long ago. It was there's a couple. The one was InfoSeek, and before AltaVista. AltaVista. Do you remember AltaVista? No. They were the big leader. They were the big leader. They couldn't be defeated. Everybody's like, why do you want another search engine? Lycos and AltaVista, they're the leaders. They're public companies, et cetera. And they went to zero because Google just had a much better product. And, just because I think what Google is doing is they've got so much cash from their profits, right? The other ones are all just like, selling more equity at ridiculously high valuations. And then they'll go public at even a higher valuation, and that bubble's going to pop. You already had the first signs of it when, and again, it'll probably pop a couple times, right? I think that if you look at the internet as a corollary, the internet, popped wildly at the .com bust, and that like just basically got to the point where people are like, the internet is dead. I'm old enough to remember that. What were we thinking? There's no way that some like internet YOLO, like Netflix can take over a good block, bricks and mortar store with people coming in like Blockbuster. Well, not immediately, but it ultimately did. And all the brick and mortar brands are gone, right? And Amazon, people were shorting it when it was $4. They said, "What were we thinking? They're not. People want to go and touch their goods. They're not going to go and buy online." So it was like extreme fear that drove the market like down to like ridiculously, bear market prices, and it slowly recovered. And then you had another bubble that popped, in 2008, and then you had another bubble that popped with the unicorns a few years later. So there'll be several AI bubbles that pop. And historically, if you look at when the stock market has its biggest drawdowns, it's at the end of a decade, right? 1929 crash, 2009 crash, 1999 bubble popping for the internet, and 2009. Because of the pandemic, it took a couple months later to kind of have the crash of the 2019 crash, and then I think 2029 crash could be one of the biggest ever. It could be the everything bubble, and that could very much be led by AI, which is a huge part of the S&P and is only going to get more. And so I think that that's something that make your profits while you can, but when you think you're unsustainably high, put in back into Bitcoin. In fact, I think that's going to be powering the recovery for Bitcoin. Even though Bitcoin winter, after the Bitcoin fall capitulation happens, takes a while, it's the absolute best time to buy. And if you're smart enough to get out of your 20x profits on the chip stocks, and you're like double, triple, your money on Google, Alphabet, and I mean Tesla was down 14%, and all these big companies that are trading at unsustainable multiples based on just perpetual growth. And you got all of a sudden all this cash that you made money on, or just gotten out with your money back, and you're trying to think where to deploy it. You're not going to deploy it in AI when it's the bubbles popping there. You're going to look at what else has a better upside potential, and it's Bitcoin. I mean, we're at there right now. You would do worse than to put money into Bitcoin today at $64,000, right? Because I think my worst case in 3 years is 180, tripling your money, just like the chip stocks in the early rise, and doing 20x your money by the time it gets to like 2037, and it'll be a million plus.
So should we look at MicroStrategy for better return, or should we look at Bitcoin?
So, Bitcoin is the safest because there's no execution risk. And the short sellers have many more vehicles to work with equities. But I would say the history has been that MicroStrategy does do better than Bitcoin because it's leveraged. But boy, a lot of risk of Bitcoin is not going to go into a bankruptcy court. There's no chance, right? There is no court. There's no CEO of Bitcoin. It could go down to unsustainably low levels. It does that every 4 years. And but there's no court that's going to seize assets from it. There's no there's no fraudster behind Bitcoin. They're not going to go and say, oh my God, Peter Todd did something bad, and so we're going to put him in jail, and it's going to stop Bitcoin blocks from producing. It's just not going to happen.
Let's talk about absolutely. Let's talk about everyone's favorite altcoin season. Are we going to ever see another altcoin season? Because a lot of tokens are rotting in a lot of wallets, and clearly there's no way out.
For the ones that are rotting in wallets, no, those are never coming back. Because most altcoins, I've said this repeatedly, most altcoins pump the cycle that they're hot. And if they're a really quality project, they might come back and pump less the second cycle, but nobody pumps a third cycle unless they've really massively pivoted and or they have phenomenal funding and or they have phenomenal leadership and or the most important thing is they have sort of a sticky base that they can enforce. I'm thinking of Binance, right? Binance has pumped every single cycle to new all-time highs. Pretty much only Bitcoin's done that besides Binance. I mean, they're the only altcoin. Even Ethereum, of course, did not see a higher high this time. And that's based on dollars. Imagine if you're basing in Bitcoin. If you're basing in Bitcoin, even Binance hasn't outperformed every time. And, Bitcoin will continue to outperform as long as, having, there's more people using it than the inflation rate. There's more money coming in. And we're only at 4%, 5%, current estimates of the world having any Bitcoin. There's about 8% that have some crypto, but some people have only meme coins or only Dogecoin or whatever, or only XRP. They're maxis for those little things, right? Or they're ETH maxis. But the 5%, let's go on the high end, 5% that have Bitcoin. There's 95% of the world that eventually, if it acts like any other, disruptive technology, you're going to have a tipping point somewhere around maybe 7 or 8%, where all of a sudden you go from the early crazy people to like the mainstream early. So early adopters is a very small amount. And if you read Crossing the Chasm, the S curve of adoption, there's several, the Gartner hype cycle, they all kind of tell the same story, kind of like early and super risky, and the people who took the risks made a lot of money, right? The people who were called crazy, but they bought Bitcoin and held on to it when it was $100, $10, 10 cents, whatever. They're extremely rich now, and they were even more rich if they followed my cycles and sold at the top and bought back at the bottom, even if they were in a high tax jurisdiction because of the exponential gains. Now, you're now getting to the point where all of a sudden, Morgan Stanley says they're going to sell to anybody, not just high, accredited investors, and Charles Schwab now, and they're all coming in now in the bottom and scooping up Bitcoin for their own accounts and for their elite clients to show how well they've done and take their fees. The ETFs are now, pretty established. They're not. 4 years ago we didn't have any ETFs. Now we've got ETFs. And so this bottom, I think, has a little bit of a cushion, a little institutional cushion, because of the ETFs and because of the DATs that were not forced to liquidate. But there's still FUD, there's still liquidations. I mean, the main reason STRC went down that low wasn't people panic selling, certainly not the institutions. It was short sellers, and it was manipulating the situation like they always do. And it was the people going irresponsibly long like they did in the Japan carry trade because they thought that the price would always be around $100, and then the short sellers forced it to depeg, and then you had people liquidating because they were going 5x 10x long and making not 12%, they were making 60% or 100%, but that depended on the peg staying at 100. For anybody else, it doesn't matter. I mean, I bought at 100 and I'm fine. I know it'll go back to 100. In the meantime, I'm making 12%, on my original investment every single, twice a month on an annualized basis. And I think there's almost a 0% chance that it never comes back. I mean, if Bitcoin's at 100,000 and it's paying 12%, like why would you not kind of do that, right? I mean, so when we're out of the bear market, which is going to be soon, we're in the final phase. Strategy will be back to resuming its climb, and STRC will be back to 100, and we'll still have the rate that they have until they decide they don't need it and they might cut it a little bit. And
So,
then you look at other yield.
I'm very curious to know how is the geopolitical, especially in the Middle East with Iran, how is the effect going to take place? Like, is the stock market now kind of normalized it and they're moving ahead?
No, they've
What
not
is
normalized
your
it.
take on
I
that?
mean, they have not normalized it. The Houthis and the stuff that's happened just in the last 24 hours. The price of oil went up. I mean, like I said, it's dominoes falling, and this reminds people of I had a conversation last night about it with a Bitcoin OG, who's not an American. He said, doesn't America always say the war is going to be, in Iraq, they were like, we're going to be treated as liberators and it'll be over within a couple of days. And of course, we sent in ground troops and it was years. Same with Afghanistan. We're all hopeful that Trump is not going to send in ground troops and make this a forever war. He ran on not doing that, but so far it's really just been, airstrikes and a little bit of elite forces. So I'm still hopeful that it's not a forever war. It's just an ongoing, skirmish. I mean, it's not a full-on war by any means. And but this is still negatively impacting the price of Bitcoin, and will continue for a while. But when we hit the bottom, then there will be a countering force of the people who say, you know what, the price is so low, I have to buy some. When we get down into the 40s, for example, if we get there. I mean, anything under the 200-week moving average or even near it. I mean, if you went and put a whole bunch of money in today, it's $64,000. You're going to triple your money by 2029. What else can you do that in? You're going to buy gold at $4,000, and you think it's going to be 12,000 in 3 years? Maybe, but I think the odds of Bitcoin being 180 are much better.
And I'm going to let you go because you have to head down to the studios.
Yes.
But
in
before you
studio,
leave,
Bloomberg, yes.
Yes, but before you leave, I want to quote this to everybody that Satoshi started. Satoshi stated in Bitcoin white paper that as long as the amount of net Bitcoin bought every 4 years exceeds the amount of new Bitcoins mined, the price has to go up. Simple supply and demand. So far, this has happened every cycle. This is a quote directly from Bitcoin Super Cycle, which is the book that we recommend everyone to go and get it. It is available on Amazon, and somewhere in the comment section, you will also see a link to it. Michael, thank you so much. It is an absolute clinic as always. The Four Seasons don't care about the headlines. For everyone watching,
Well,
get
they're
your.
not as important as the headline. They're more important than the headlines, but they are impacted at the edges. That's the macro.
That's the
Thank you so much.
macro, and thank you so much. We'll see you next week,
See you next week.
Have fun, and thank you so much once again.
Okay, thank you.
Bye-bye. So for everybody out there, that was Michael Terpin, a legendary OG in this space. So if you guys have any questions for next week, please bring it on so that we can ask him and give you a shout out. Thank you, everybody, once again.
All right.